This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, February 12, 2018. Last week, commodity prices and economic reports were mixed. U.S. steel production rose slightly, now slightly ahead of last year and well ahead of 2 years ago. Oil fell a big $9 a barrel to $59.20 on global uneasiness, but also on a new multi-year high of U.S. oil production. In fact, U.S. oil production rose to an almost historic high in the history of the United States, a great thing for jobs and helps reduce our huge trade deficit. Iron ore rose $5 a metric ton to $78 on near multi-month highs on growth of demand and good supply. Scrap ferrous prices were steady. They remain well ahead of last year and about double that of 2 years ago on global demand and steady supply. Hot-dip galvanized steel remains about $942 a ton on good demand. We are hearing word of increases coming in many finished steel prices. Copper fell a big 13 cents to $3.05 on good supply and major nervousness in the world on financial markets. Copper's up 3 cents this morning to $3.08. The 5-year chart shows copper is about 20 cents off the multi-year high of last December, so overall it remains fairly high on good demand. Copper inventories rose slightly to about a high for the year as high prices have brought more production online and have brought more scrap to the market. Aluminum fell 3.5 cents to 96.5 cents, now 7 cents under the about 6-year high of last December. Aluminum LME inventories fell to another about 8-year low as production has not been able to keep up with demand. Importantly, U.S. companies that melt scrap aluminum are totally full of inventory and are pushing off deliveries of some materials for 2 months, which is actually pushing prices down. While total exports out of the U.S. are at record levels, so are imports of everything from cell phones to consumer goods and cars. December's trade deficit was the worst since 2008. We continue to import much more than we export, a clearly bad thing for the economy. Germany is known as one of the highest labor countries in the world, especially with its high cost of benefits like government-paid health care. Note, Germany has a huge and trending up surplus, not deficit like the U.S. Cheap foreign labor is not the only reason the U.S. has a huge trade deficit. The U.S. Non-Manufacturing Purchasing Management Index for services that indicates growth or slowing jumped to 59.8 in January, the strongest expansion in services sector since August 2005, 13 years ago, amid rising production, new orders, and employment, which was the strongest on record. High growth keeps upward pressure on prices and interest rates. A huge U.S. federal spending bill was signed this week by the President with major investments in military and social programs. Importantly, the economy is doing the best it has done in years and tax receipts into the government are at record levels. Yet spending is growing faster, so deficits by the government are approaching the highest levels reached during the depths of the recession in 2009. This means government borrowing will increase, which will raise interest rates for us and hurt businesses. Mexican veal production remains on a major upward trend, meaning U.S. parts manufacturers should be targeting this market for exports and looking to set up operations in Mexico. Much of these vehicles are sold into the U.S. by GM, Ford, and Fiat Chrysler. Wall Street had its worst one-day point drop in history as concerns that economic growth will be rising and that interest rates will be going up on the enormity of the government deficits. The Dow fell 1,330 points, ending at 24,191, with a positive day on Friday, and today will start off positive as well. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.